Okay, let's talk AMD. I mean, the stock chart just looks like a vertical launch, doesn't it? After this historic run, adding over 80% this year alone, the question isn't really if the engine works. It's more like, can it possibly maintain this extreme altitude? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks, working with data captured on October 17th, 2025. As of 7:05 a.m. ET, we're diving deep into advanced micro devices, ticker AMD. And our mission today really is to try and resolve this massive tension we're seeing between the company's apparently flawless execution and, frankly, that breathtaking valuation. We're using our research here. Let's get into it.
Yeah, it's fascinating because right off the bat, you see this macro conflict. This morning, the overall market feels, well, nervous. Definitely a risk-off feel. You know, the NASDAQ is already down to over 1% pre-market.
So nervousness there.
But that's colliding, like, head-on with this red-hot semiconductor industry. I mean, the demand for AI chips is just insatiable.
And AMD's recent acceleration, that's down to some really fundamental, possibly game-changing deals, yeah. Specifically, October 6th, AMD announced that groundbreaking 6-gigawatt agreement with OpenAI. Now, 6 gigawatts. That's just a staggering amount of committed compute power.
Huge proxy for compute.
It really positions AMD as a, quote, core strategic compute partner. Using the MI450 series and, future generations, too, this feels like it redefines their scale.
Absolutely. And if you tie that into the bigger picture, there's also the Oracle deal. That's an initial rollout starting Q3 2026 of 50,000 MI450 chips.
50,000 just to start.
Exactly. These deals, there's why the stock has surged, over 52% in the past year. And it's why Wall Street seems convinced. You look at the ratings, over 73% buy, and we found 0 sell ratings. 0.
Okay, but here's the rub, right? The part you really have to wrestle with, valuation.
That's the elephant in the room. And it raises a really important question if you're trying to learn about this stuff. Because while the growth story is, well, undeniably transformative, our fair value analysis, looking purely at current cash flow, near-term earnings, it suggests the stock's intrinsic worth is maybe somewhere between $50 and $55 a share.
50 to 55, okay. And yesterday it closed at?
$234.
Wow, okay. Yeah.
That $180 difference, that's the core tension right there. It means the market is like aggressively pricing an absolute perfect execution.
Perfection.
And just massive multi-year dominance in AI. It's a bet on, decades of future growth, not really today's performance.
So how's the market handling that massive gap, that speculation? Are people getting nervous about that?
It doesn't look like it yet. No. Sentiment is still overwhelmingly bullish. The put-to-call ratio, super strong at 0.79. And the most popular options bet right now is the $250 call strike. People are betting it goes higher. Short interest, tiny.
Yeah.
Just 2.35% of the float.
Okay, bullish sentiment. But then you look under the hood at the technicals, and our research shows some conflicting signals there.
That's exactly right. You had that huge 24% leap yesterday, hit a high of $241, but already you can see fatigue setting in. Pre-market, it's slipping below $229. So while the big picture trend is strong, there's this weird contradiction in volume.
How so?
Well, the broad measures, they show significant accumulation, like big institutional money buying in. But some shorter-term indicators, they're actually flashing a warning, suggesting money might be starting to rotate out after that huge spike.
Okay. Profit-taking, maybe?
Could be. The upward thrust was powerful, no doubt. But there are definite signs of, let's say, momentum exhaustion right at these extreme highs.
Let's pause there. That execution risk tied to the valuation, it feels massive. Do these huge deals justify that price, or should we be paying more attention to those technical warnings?
That's the essential balancing act, isn't it? We have to state the risks again. 1, the valuation is just profoundly disconnected from current fundamentals. 2, there's clear technical exhaustion showing up. And 3, the broader market is opening weak. Those are real headwinds.
Okay.
However, the reason we're still leaning bullish, cautiously, is that the OpenAI and Oracle news, it feels like a genuine game-changing catalyst. These aren't just orders, they're like infrastructure commitments that fundamentally redefine the company's growth path for, well, the rest of the decade, probably. So our outlook remains cautiously bullish.
Cautiously bullish. Okay, let's make that actionable then. Define the key levels for today's trading. Where's the line in the sand?
All right. For the bulls, they absolutely must defend the support zone we saw forming in pre-market. That's roughly between, say, $223.50 and $228. That's the floor.
Hold $223 to $228. And if they do?
If they hold that, the immediate target is to get back above $241, yesterday's high, and then make a run for that big psychological $250 level.
And for the bears? What invalidates the bullish view?
Simple. A firm break, and critically, a close below $223.50. If it breaks that level decisively, the immediate bullish momentum is likely broken. You have to respect that line.
Got it. $223.50 is the key pivot. So wrapping this up for you listening, AMD looks like a rocket ship, right? World-class engine, incredible deals, but it's flying at an altitude where, honestly, the air is getting very, very thin. That valuation requires near perfection. So trade smart, definitely some volatility here, and just remember that massive premium. It's all speculation on a perfect future unfolding. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.